Welcome back. Thursday morning, expiry day, lots of individual stocks to react to in terms of earnings. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, we've got Surbhi on LIC. Surbhi.
Good morning. Thanks for that. So LIC reported a decent set of Q4 numbers. The mild positive surprise could be the expansion of VNB margin that they've seen on a sequential basis. The VNB margin expanded by nearly 500 basis points when you compare it to Q3. In Q4, they reported a VNB margin expansion, VNB margin of 19.4% versus 14.6%. The total APE was down 7% in Q4, but that was already known as the monthly business data was out earlier. The value of new business stood at 3,700 crores. On a full year basis also, the numbers were pretty decent. The total APE is up 13%, value of new business is up 21%, and the margins have expanded by 100 basis points. The embedded value growth came in at 7.5%, but that's mostly because of unwinding. So if you strip that off, the embedded value growth is pretty muted, but in line with what the street was expecting. What we have to watch out for is the commentary on the non-par savings product, and they plan to increase their share in that product segment. So we'll be awaiting management commentary on that front.
Thanks a lot for that, Surbhi. Remember, we'll also be in conversation with the management of LIC at 12:30 p.m. to discuss in detail their past quarter's numbers. Well, let's focus on a couple of other names. And Nykaa came out with a set of numbers. Mangalam, how were they?
Yeah, thanks for that. So, for Nykaa, the numbers weren't very different from the quarterly update that the company had given on the top line. So, a lot of the bad news was perhaps in the price. The good news, however, was that the EBITDA margins expanded both year-on-year as well as quarter-on-quarter. So, just to run you through the numbers, 33.7% growth in their overall revenue year-on-year. Of course, quarter-on-quarter, they were down around 11% on account of seasonality. Third quarter is a seasonally strong quarter. EBITDA grew by 83% on operating leverage year-on-year, so the margins improved by about 140 basis points. The company reported a decline in their net profit, and that's largely because of a tax expense versus a tax credit in the base quarter. In the segments, the beauty business grew by about 30% in their revenues. The fashion grew in late teens. This was a growth driver for the company, but they had indicated weakness in this segment in the fourth quarter itself. The other parts, which is male grooming, etc., grew over 258%. Of course, this was on a low base as well. The company, however, in the conference call said that beauty and personal care consumption trends are improving, and more importantly, the fashion GMV growth in FY24 will be similar to that in FY23. FY23 was 47%, so that also points at improving trends as well. So a lot of the bad news perhaps in the price, see green on the stock.
All right, Mangalam, thanks very much for that. You'll hear from Falguni Nair, Executive Chairperson, MD and CEO of the company, talk to us about those numbers at 9:40 this morning. Okay, let's move on from new age to old economy. Oil India will be in focus. Sonal is here with the numbers. Sonal.
Thank you so much for that. Well, Oil India's numbers in operational miss this time around, while the revenues were flat on a quarter-on-quarter basis to come in at 5,400 crore rupees. EBITDA declined 17.5%. The decline was expected. It was much more than what the street was working with. Margins declined by almost 1,000 basis points. Net profit was up 2.5%, but that was because of a higher other income component. They also acquired the Numaligarh refinery, and they have given details here as well, but for the entire fiscal. GRM for Numaligarh refinery came in at $19.8 per barrel versus $14.3 per barrel, and it aided the full year financials for the company as well. But for quarter 4, it was an operational miss.
Okay, all right. Thanks a lot for that, Sonal. Well, Nalco's numbers, actually very, very strong set of numbers is what we saw there. Revenue is much better, EBITDA as well better, margins better, and profitability as well better. So a few factors would have played out. One is realizations would have recovered on a sequential basis, which is good news. And costs have cooled off. The cost of power consumed, well, that was down by close to around 20% on a sequential basis. And that's the key reason that we saw a big recovery in profitability on the aluminum and alumina segment as well. So on a year-on-year basis, still the chemicals, which is the alumina part of the business, it's still down. But on a sequential basis, there's a good recovery that we've seen, and the street will like that. The profit number looked even better on the back of a better operational performance, low effective tax, lower finance cost, as well as lower depreciation. So these numbers look good. They have also declared a dividend of around 1.5 rupees to close the year. They're already declared close to around 3.5 rupees earlier. So thumbs up out there. Only problem is the global setup is a little bit muddled. So that's the problem. But otherwise, for the past quarter, numbers look very, very good. But Sonal, coming back to you, tell us some more Q4 numbers that you're tracking as well as some stocks and news.
Yes, so first let me start with the numbers. On Fine Organic, it was a stellar set for the company, a big operational improvement, and after some quarters of weakness, we've seen a comeback here. Revenues, they were down 3.3%, but operationally it was strong. EBITDA was up 27%. Margins, they expanded by almost 900 basis points, and profits were up 23%. The good part is that gross margins expanded substantially, 1,600 basis points on a quarter-on-quarter basis, 550 basis points on a YY basis. For Phoenix Mills, it was another good set. Their revenues were up 47%, EBITDA up 79%, margins expanded by 1,000 basis points, and profits were up 140%. Across all their segments, they saw improvement: malls, hospitality, and the small segment that is residential for them. Gujarat Gas also is in focus because industry sources are suggesting that Gujarat Gas has cut prices of industrial gas yet again to 38.43 rupees per SCM. This will be applicable from 1st of June. Now remember, it is around a 2 rupee per SCM cut, but this is the 5th price cut that the company has undertaken in the industrial segment since the start of 2023. That is because of lower spot LNG prices. They have been facing some competition from propane, and this will actually aid volumes for Gujarat Gas. So it's a positive for the company.
Okay, thank you very much for that. And for the final list of stocks, Ekta joins in. Ekta.
Thanks for that. Well, I'm going to start with Piramal Pharma because it is a strong Q-on-Q recovery for the company. Highest margins and revenue since Q4 of FY22. It's made a profit after 3 consecutive quarters of a loss. The company says that Q4 is generally the strongest for the company. But nonetheless, revenue 2163 crores versus 1700 odd crores last quarter, up 26%. The CDMO business is up 26% Q-on-Q. Complex hospital generics is up 37% Q-on-Q. Margins have recovered to 16.2% versus 5.1% on a Q-on-Q basis, and a profit of 50 crores versus a loss of 90 odd crores. JB Chemical, possibly a red on account of the profit miss. Revenue was up 22%. The street was anticipating a little higher in terms of revenue, but the domestic business continues to be strong, up 29%. EBITDA up 20%. Margins in line at 21.5%. Profit, however, at 87.63 crores versus estimates of 99 crores. Companies saw higher interest costs, but on a Q-on-Q basis, the cash flow has been so strong that the net debt has been lower. The stock also has rallied quite a bit, up 20% in the past 1 year. Borosil Renewables, the net profit up to 81% on a Q-on-Q basis, revenue up 26% Q-on-Q, EBITDA up around 84.8% on a Q-on-Q basis. The company is also looking to raise around 1100 odd crores. So all of this could probably result in the stock being in the green.
Thank you very much for that. Let's do a quick recap then of the top stocks this morning. Stocks with positive news flow are LIC, Nykaa, Nalco, Phoenix Mills, Fine Organic Industries, Gujarat Gas, Piramal Pharma, and Borosil Renewables. Some stocks with negative news flow are Oil India, where there is an operational miss, and JB Chemicals. Now let's talk about what's happening in the world of commodities. Manisha Gupta joins in for a complete roundup. Manisha.
Thank you for that. Well, I'll start with the crude oil prices, where we have seen the prices gain up by 4% in this week. There is U.S. demand from road, air, and seaborne travel that seems to be picking up. And the surprise clearly comes in from the U.S. crude inventories, which have seen a decline of 12.5 million barrels. The gasoline inventories declined by 2 million barrels, so there is definitely demand coming in on ground. The Goldman Sachs report overnight suggests that supply deficit will start as early as June, and that led to nearly 2% of buying in the overnight market. But there is absolutely no buying when it comes to metal prices. So most of the metals are trading at a multi-month lows right now. Markets also reacting to the Fed May meeting minutes, where there is hesitancy to hike rates, but no plan yet to rate cut. So that is what is weighing onto the market. So you have copper, aluminum trading at a 7-month low, zinc at a 27-month lows, and all the other metals also closing into the negative, including gold and silver, which also are now trading at a 2-month lows.
All right, Manisha, thank you very much for that. So under a bit of pressure across the board. Deepan Mehta is director at Elixir Equities, and he'll join in for a quick conversation on specific stocks, with results, non-result names which are moving up in just a bit. We also have the management of Titagarh Wagons. The stock has been a complete, sheer outperformer over the last year, 2 years. The numbers came out. We'll understand the outlook for FY24 from them in a bit. Umesh Chaudhary, Vice Chairman and MD, Titagarh Wagons, also coming up.